On this episode of Law Unpacked.
What they'll do is they'll determine the total cost of the loss, and for the roof replacement, let's just use round numbers, that it's $20,000 to have this roof replaced. Stop any water, for example, that was pooling in the house, like whether it was by, shutting off a valve. Let's say that a hurricane comes by and completely blows the roof off the house. You'll have to come up with the first $8,000.
Welcome back to another episode of Law Unpacked. Today we have a very timely and important discussion with Paul Lalonde, owner of Insurance Wagon, a seasoned expert in helping homeowners navigate complex insurance issues, especially after disasters like Hurricane Helene. Paul has spent years educating clients on how to protect their homes and businesses from Florida's unpredictable storms. And today, he's here to guide us through the essential steps for understanding coverage, filing claims, and preparing for the challenges in Florida's evolving insurance landscape. Paul, thanks for joining us.
No problem, Sean. Thanks for having me.
So, Paul, tell me, for those that are experiencing issues after this Hurricane Helene and having to file claims, what's the first thing that you would tell your clients to do at this point?
Oh, the first thing is after damage has occurred, the first thing is to make sure it's safe. If you're seeing power lines down, obviously we're already past this phase, but you want to make sure you, yourself, and your family are safe. The next thing would be if you could stop any water, for example, that was pooling in the house, like whether it was by, shutting off a valve. If a pipe had broken from the hurricane, shut off the valve. There is a duty there for you as the insured to help out and try to remediate damage. From there, the next call is definitely to either your agent or to the home insurance company, of which, either way is a good way to start it. We would prefer to go to the home insurance company first because regardless, once the claim is filed, the claim representative will need to speak with you as the homeowner to kind of get your side of the story. Even though it may have been obvious that it was Hurricane Helene, they still want to know what happened. And then what they would do is schedule someone to be dispatched to come out and check out the damage to the property and begin the claims process.
And when you're talking about an adjuster that would come out?
Right. Most likely it would be an adjuster. If it's a catastrophic event, they would tend not to deal with just the inspection part of it. A lot of the carriers are using software and various satellite imagery to determine pre and post storm conditions now. So there's even some carriers who would go out and would pay for a service who would literally fly some satellites over certain areas of Florida, take images so they could easily compare what a roof looks like prior to the storm. And then once Helene passes through, they can go ahead and fire up the satellites again, take another look at it, or fly planes over it, take another look at it, and they can compare quite easily the before and after photos. And if they do see that it has been completely catastrophic, like the images that we're seeing in Helene, they're going to go ahead and dispatch to the area automatically before they're even waiting for a call from you. They're trying to be a little bit more, not necessarily preemptive, but responsive these days, especially after large catastrophes.
Now, you mentioned they're looking at before photographs. Rumor has it there might be another storm that's coming to Florida. Well, we know there's going to be another storm. We just don't know when. For anybody that's listening to our podcast or watching us on YouTube, what advice would you give them to help protect themselves in the event of another storm?
Well, I think we do a great job as a state to make everybody panic about storms and stuff. And it helps us out sometimes to go ahead and maybe get the process moving, to go ahead and get your windows boarded up. The imminent threats that we see, it's anxietal to say the least. People tend to lose their minds a little bit. So the first thing I would say is just stay calm. It's a storm. We're Florida. We've done this a bunch. We've survived many a storm. It's just, it's going to be an inconvenience. But the good thing is like, if the storm does come through, and let's just use the example that you just had a whole bunch of damage from the prior storm. Hurricane deductibles on a home insurance policy normally are percentage based, but they're also calendar year. they're per calendar year many times. So, and I would definitely verify this on your policy, but many hurricane deductibles, you're only going to pay them once in a calendar year. So if there are 2-3 storms back to back, I believe it was 04, 05 was the last time that happened. But, we had a couple clients that they had their roof ripped off, had it replaced, and then later on that summer, right back through and the roof's off again. So they've already paid that calendar year deductible, so they're not going to be faced with it again, most likely, unless it was a lesser type of policy.
That's good information. And let's talk a little bit about that hurricane deductible. How much is that hurricane deductible?
Yeah, if we were to say the standard is usually 2%, and it's not 2% of the loss. It's 2% of whatever your policy limits are. So if your policy limit is $400,000, otherwise you're insuring your home for $400,000 in coverage, your hurricane deductible will be $8,000. So take it a step further. Let's say that the hurricane comes by and completely blows the roof off the house. You'll have to come up with the first $8,000. So what do I mean by that? You're not stroking a check to the roofer or to the insurance company for $8,000. Normally, what they'll do is they'll determine the total cost of the loss, and for the roof replacement, let's just use round numbers, that it's $20,000 to have this roof replaced. You have an $8,000 deductible. They'll simply cut you a check for the difference. Now, they may hold back some depreciation, which they will release once the job is completed and we can prove that the roof is now on. They will release the remaining depreciation on the claim. But normally you are only on the hook for the deductible amount.
So you mentioned just a minute ago regarding multiple storms. How is it for them, for clients to take pictures and really categorize what damage occurred from which storm to potentially a next storm? What kind of documentation should they work with?
So we're all very good at using these things. And I would say to upload it into the cloud, but I could tell you, and I think many people would agree with us, that, the cloud's great, but man, you're going to have to pry this out of my cold, dead hands. I'm never going to lose this. I would recommend going to the cloud, but first step, get it onto your phone. Go ahead and take a video recording, walk around the exterior of your home, walk around the interior of your home. Make sure that there's a date stamp on it. We can always tell if there's a date stamp on the file, but just to make yourself feel better, you can put a date stamp on there for future, for categorization, maybe in a file down the road. But if you can give the insurance company and whoever would be involved, the claims examiner, a good snapshot or story of what the house looked like before the claim, it really will help the settlement process. And it's not going to really help maybe determining value, but it'll tell them what type of shape the property it was in, what was in there before that. If you had a very nice leather sofa and it's gone, probably a good idea to take a picture of it or some sort of video. Definitely have some receipts. But at the end of the day, the video would be the best.
So what I'm hearing is making sure that they have, even before a storm comes, take some video of their contents, of what the roof looks like inside their house. And then if we're having another storm, make sure they do it again to be able to document, what it looked like after this storm versus what it's going to look
right.
might look like.
And I'm not, don't get the impression to get up on the roof and take videos of the roof or anything like that. That's not the point of it. Because, we don't want you getting up on the roof to take videos of a roof. We want you safe first and foremost. So take the videos. If you got to get evacuated, don't even think about getting up there to take a video. Just get out. If you've got the time to do it sooner than later, that's definitely the recommendation. Don't wait till the last minute till there's evacuation orders and we're running around with GoPros on our heads and taking videos of all your stuff. It's not worth it. Do it now or don't do it.
That's great advice. I want to get into a little bit with regards to individual policies, especially with regards to property insurance. Typically, if I understand correctly, there's typically 4 types of, with under one scope of property insurance, you have coverage A, coverage B, coverage C, and coverage D. Am I accurate in that statement?
Yes, there are definitely coverages with letters associated with it, for sure. And those are probably some of the most important coverages, yes.
Paul, I want to go through the insurance policy specifically with regards to a personal dwelling. walk me through the different coverages that are involved in one policy. And specifically, we'll start with coverage A. What is coverage A?
Well, coverage A simply means your dwelling. So it's the amount that the insurance company feels would take to rebuild your home. Not the value of your home, but how much it would take to rebuild it. So let's use $400,000, for example. The home is valued at $400,000. What the carrier is doing, how we get to $400,000 is something called a replacement cost estimate. These are usually independent software systems. There's a few major players that offer these to insurance carriers. Well, we'll type in an address, for example, to pull back certain data like the square footage of the home, the year it was built, and the materials used. We'll use that along with 50 other variables to determine that $400,000 limit without going into detail of the replacement cost, just to share what we're seeing as far as the average replacement cost goes. We're seeing it at about anywhere between $150 to $200 a square foot for reconstruction, it's higher than I've ever seen it in my career, but I would only anticipate that's going to keep going up. So if they're keeping going up, then the premiums will keep going up. But we're going to do our best as agents to kind of make sure that the dwelling coverage is accurately reflected. So that dwelling amount, that $400,000 is pretty critical. So we want to make sure as agents that we're doing the due diligence and using the proper software to calculate it. So that's important. And then once that coverage A or dwelling is determined, so that $400,000 is determined, the other coverages below that, the coverage B for other structures, the coverage C for personal property, for example, are both percentages of that coverage A with many carriers. So coverage B, a good average with coverage B, the standard is usually 2%.
So coverage A is going to cover the actual dwelling, the cost to rebuild the house, correct? And that excludes
That's correct.
The furniture, the structures on there, or other structures. We're simply talking, is that including interior, drywall, kitchen, that sort of thing?
So the best way I can explain it's the structure. It's the actual building portion of the home, from the roof to the floors. The other part of it that I think you're kind of getting to is the personal property on the inside of the house, like your stuff. So a good way that I've heard it explained many, many years ago, and I still use this as an example, is if you can imagine to just take that roof of that house and peel it back, pick it up, and then dump all anything that falls out, that's normally contents. All right. Everything else is the structure. So when you're looking at that, anything that moves essentially is your contents, and outside of the structure itself.
Got it. And so going into coverage B, which is other structures, correct?
Yep.
What does that cover? What is considered other structures?
So some examples would be a fence, a mailbox, a driveway in some cases. Most common would be a pool, a detached garage, maybe a gazebo in the backyard. Those are the most common other structures. Anything that's detached from the home. Some carriers, insurance carriers, will draw the line at, like, take swimming pools, for example. If there's a continuous masonry foundation from the home to the pool edge, they'll count it as the structure. Whereas many others, if it's detached back in the home, they want it in the other structures. And a lot of it has to do with coverage, but also pricing. So you have to be very careful how the agent would add on coverage for other structures, because it may not be added correctly. And you definitely want to make sure that you have adequate other structures. If you have a garage in the back, for example, it's always going to be a percentage of that coverage A. Many carriers will allow you to add additional on, but it starts off as a percentage. So 20% is sometimes the highest, but about the average on the high is about 10% of those other structures. So a home that's valued at $40,000, the 10% is $40,000. That should be good enough for a detached 2-car garage in the backyard.
Just so I'm understanding correctly, so $40,000 would be the total amount for those other structures. That would have to include your pool cage, garage, detached garage.
Well, now remember the pool cage is attached to the house. That's something even a little weirder. So now the pool cage, there's even a different type of coverage for that. Many carriers will exclude the coverage for a pool cage for hurricane, which is dangerous because, I mean, you probably could imagine that when the wind blows, there's a real good chance that your screens are going to get ripped up. If a tree falls into the actual pool cage, that's some pretty severe damage. So on that note, Sean, there are almost every carrier with the exception of a handful. You have to schedule the pool cage coverage on the policy if you want coverage for your pool cage during a hurricane. That is one of the number one shockers we've had in the past. And a lot of times it's just the screen that gets blown out, but it starts the conversation of, what do you mean that's not covered? Well, it's not covered for hurricane. Screen, you can imagine, is pretty cheap. It probably wouldn't hit the deductible anyway. This is really for the structure itself. It can get quite expensive. So about $50,000 for your.
Yeah, I was gonna say, how would a consumer know to look for that to see if it's covered versus not covered?
There's that answer of read the policy, but more importantly, talk to your agent. Use an agent, because if you do use an agent, you have the benefit of talking to that agent about the specific coverages. You're not talking to a call center. Normally, you're talking to somebody in the same state that you're in, and they really know the policies, because each state has its own Department of Insurance, has its own type of policies when it comes to home insurance. Like, for example, we don't offer any earthquake insurance here in Florida, but there's really argument if we need to even offer it in the first place. So California offers it, but we won't offer it. So every state is different. So even if you're moving in from another state, the policy form that you see in Florida will be different.
Moving on to coverage C, that's personal property, correct? Let's talk a little bit about coverage C. What does that cover? Replacement value versus actual value. Educate us there.
Sure. As I was saying before, with picking up the house and dumping it out, that could be anything from pots and pans right down to the shoes in your closet, of which all are covered under that personal property. Part of the decision that the consumer needs to make with the agent is, of my personal property, do I want any losses settled at actual cash value, or do I want them settled at replacement cost? The big difference between the two, simply that actual cash value factors in the cost of depreciation. So without being completely, I will just tell you right now, my math will be wrong on this, but let's say you had a refrigerator that you purchased in 2012, so it's now 12 years old. There's a little bit of a kitchen fire. If you did not have the personal property replacement cost endorsement for your personal property on your policy, that refrigerator loss would be settled at actual cash value. So instead of the adjuster going, oh, great, you have actual cash value, or I'm sorry, you have replacement cost, we're just going to go ahead and find a Whirlpool 25 cubic foot stainless steel refrigerator with an ice dispenser in the door, and that's what you're going to get. That's the replacement cost. But guess what? That actual cash value is now going to, if you did not have replacement cost valuation, you had actual cash value, you have 12 years of depreciation factored in to the replacement of that refrigerator. I don't think you're going to be happy when you get the check. So we highly recommend to purchase the personal property replacement cost endorsement, which will then settle your personal belongings for a covered loss at replacement cost. It's a big deal, especially if you're thinking on the terms of an entire house. Fires, even if it's in the kitchen, Sean, they go all over the house. And I'm not just talking about flames, I'm talking about from the smoke. So if you can imagine the size of a loss that could cause, and then go ahead and factor in 10 years of how long we've had our furniture on the inside of the house, and it could really, you will not be happy about the claim settlement. It just won't happen. So highly recommended to purchase the personal property replacement cost policy. It is a couple $100 more, but definitely well worth the money for that.
How do they, and the video that we've recently seen, or the footage that we've seen, how do they calculate personal property when it's a total loss?
Well, here's the idea behind it. So on the home insurance policy, you're going to get that policy with that coverage A, coverage B, coverage C. On that coverage C, from the get-go, we know we're not going beyond that. So if it was a max value of, say, $100,000, the carrier won't pay any more than that $100,000, unless it's some sort of strange circumstance that I'm not aware about. But and again, we're talking about other states here. Our main focus is in Florida. So in North Carolina, where some of these massive losses were from flooding, I don't know how the North Carolina policy, I would only assume it would be very similar to Florida, and that means, but yeah, back to our conversation about taking videos. We've had people go back and say, oh yeah, look, here's this picture of me in front of my Christmas tree from 2022. There's that piece of furniture in that picture. Go ahead and settle that claim. Like, it really has come to that. Family photos with rugs on the ground, if they had to be settled, if there was ever a discrepancy. However, normally the carrier is giving you a sheet. You're filling out the loss form, whatever they want to call it. And at the end of the day, you're still attesting that you had that stuff in your house. So what can go wrong if you really didn't have that stuff in your house and you signed that attestation and you were saying that you had $100,000? Just because it was on the policy doesn't mean that you had it. We definitely want to avoid any fraudulent behavior here, because you are signing a document stating that it is true and accurate. But outside of that, outside of videos and documentation, there's really not much we could do to prove it. They're not going to ask for receipts on everything. They can't. If maybe you had some personal property that was scheduled outside of the normal personal property, because personal property on a home insurance policy, there's always going to be limitations on it. What do I mean by that? Guns, for example, collectible guns, there may be a limit of anywhere between 1,000 to 5,000, depending on the policy. You can have some small limits for jewelry. For example, you may have a $2,500 limit for jewelry, but only $500 max per piece. So there's always sub-limits in that personal property limit, but the ability to schedule on more expensive items is always there. That's where I may see them ask for a receipt or so.
So we've talked about the three main coverages. Where does like loss of use and being able to have to stay in a hotel, where did that come into the policy?
I got to tell you, that's one that's near and dear to my heart right now, because we experienced a very large claim last year where we were forced to move out of my home for 10 months. With that, without the loss of use coverage, it would have hurt really bad. It would have hurt a lot worse than it did. The purpose of the loss of use coverage is for those of us that maintain mortgages on our home, especially this helps. If you have a fire in your home, you're going to have to move out. There's no way to live there while they're rebuilding it. So you'll have to go and rent somewhere else. That doesn't mean your mortgage payment stops. They're not just going to forgive you and say, oh, you know what? You're having a bad month. You had a fire. We're going to forgive this until you get the house together. It's not going to work. You're going to have to maintain and continually pay that mortgage. But then you're going to also have to turn around and rent a house or stay in a hotel. That limit is there to reimburse you for it. And I can't help but say that again, it's a reimbursement amount. They're not just going to stroke you a check for 40 grand to go stay at the Ritz. You're going to go and normally, unfortunately, shell some of this money out. You're going to pay to go ahead and stay in the hotel, and then you're going to keep your receipts and send them into your claims adjuster. And as you're spending this money, you're continuously sending it in, and they're releasing checks, refund checks back to you. So it's a little bit of a process, but it is a coverage that I know personally has really helped me out in the past.
So is this an endorsement or is this under one of the A, B, or C coverages?
It's not an endorsement. It's every policy has some sort of base limit in there. But some carriers the normal is about 10% of that coverage A. Some carriers will allow you to go up to 20. There are a handful of carriers that will say unlimited up to the policy limits. But here's what I have to say about that. Everything is relative. If it's up to the policy limits of $300,000, that's a lot of money to be reimbursed. So remember, if you're wanting that $300,000, it's going to be reimbursed. So you're going to be shelling that money out. And normally a claim is going to get fixed quicker than you're going to run through that unlimited money there. So it's usually going to be a 10%, 20% limit on the coverage A.
Let's talk a little bit about endorsements and other coverages. What other endorsements do you feel that a consumer should look for to add on to their policy that maybe their current agent didn't tell them, or they didn't use an agent? What else should they be insured for?
So the biggest thing personally is liability coverage. There's always going to be a limit on your HO3 policy, your HO6 policy. Those are the primary home and condo policies that we sell. You want a bare minimum of $300,000 there. Many carriers are actually allowing us to go up to $500,000 for a minimal amount of money. I mean, like $10 more. So to me, essentially tripling the liability coverage to $300,000 from the $100,000 that's normally built in the policy is usually about like a $60 to $80 change. And to me, it's to triple the coverage, $80. That's kind of a no-brainer. But also in our litigious society now, Sean, a lot of attorneys are suing for policy limits to begin with. So if the policy limits are $100,000, it may not cover the loss truly. We're seeing that $300,000 is the recommended amount now. Not only that, we even heavily consider umbrella policies with every home insurance policy that we write, and that's simply extending the liability. That's another discussion, but you had asked about some endorsements. So it's the liability to make sure that that liability is up to $300,000. The second one would be water backup. Your standard home insurance policy will exclude water backing up through the pipes, whether it's from a clog or a backup at the street. And we all can kind of envision how nasty that could get. It can turn into a pretty undesirable claim, let's say. You can add water backup coverage on for, a small amount, anywhere between $25 to $100 normally. And it'll cover up to a specific policy limits. Most of the time, unfortunately, it's only $5,000 in coverage. Some carriers will allow you to purchase up to 10, but otherwise there's no coverage for water backup. And then one additional coverage is personal injury. And it's not the personal injury that you may be thinking about, or we may be thinking about. It's not you. It's not hurting you. It's simply an extension of the liability, and it allows coverage for libel and slander. So if your 15-year-old is on Facebook bashing the teacher, maybe saying a few lies about a teacher, and it does affect the teacher, that say he was fired or say he was suspended, his reputation was harmed, it'll protect your family against lawsuits for libel and slander. And it's unfortunate, but we've seen it happen. Also, if you do choose to partake in an umbrella policy, many umbrella carriers will require that personal injury coverage on the underlying home insurance policy. So our intention is to educate people about umbrella. So educating them from the umbrella point of view and the personal injury point of view is what we do in regards to liability.
What is law and ordinance coverage, and is that important to add on to a policy?
One of the key parts of the policy is ordinance and law coverage. The scary part is in many options, it's optional. Many policies, it's optional, but usually there is at least 10% of coverage of that dwelling aid built into the policy. From the agency perspective, we look to make sure that all clients have ordinance and law, no matter what year the home was built, because guess what? Codes can come at any time. It doesn't matter. I mean, it could have been from 2018, a new code comes in. If you have a loss, say in 2024, and you don't have ordinance and law, the carrier will not be required to build to the new code. They're going to build to the code that you had your contractual agreement on, which was the year the house was built, unless you have ordinance and law coverage. So I'll give you a personal example, Sean. I mentioned before that I had a claim. And what happened was I had a tree fall into my home. Part of the home, the house was built in 1983. The tree hit the screen enclosure in the back. Not only did they could not replace the screen enclosure because it was built in such a way that they would not be allowed to get it through any sort of building permitting. So we had to build it to today's code, which is to integrate the screen into the roof line, yada, yada, yada. Well, integrating anything usually means more money, right? So the normal quote was about $25,000 to have the screen enclosure rebuilt to what it was. However, we couldn't do that because the county wouldn't pass the permits, rightfully so. So the solution was to build it into the roof line. By doing that, that increased the cost of the project by $17,000. So now we're looking at a much larger bill. And if I did not have the ordinance and law coverage, guess who's footing that $17,000 extra? Me. Because they would not allow us to rebuild to the old code, right? No one's going to pass it. It's going to blow down. So it's pretty important. It saved me personally $17,000. I actually have a number associated with that coverage. So it's important to me. And I would hope, and when we kind of, as we're going through these policies with our clients, I'm sharing the same story and saying, look, this coverage specifically has hurt quite a few people not having it.
Footage of some flooding that happened or some storm surge that happened in St. Pete Beach. Would this be covered under the homeowner's policy, or is this going to be covered under something different?
You know, whenever there's a hurricane involved with storm surge, this is always a discussion. And one of the easiest ways that I found to explain it is, if you think about surge and you think about water coming into your house, how is it going to come in? Well, it's going to come in a few different ways, but specifically for flooding, for an NFIP policy or your typical flood insurance policy, any water rising from the outside, rising up and into the house is usually a flood claim. Anything where the wind's blowing off the roof and rain's coming in, I mean, that's usually a home insurance claim. So storm surge, tidal surge, if you're on a lake or a retention pond and all of a sudden the water rises up into the house there, if you're in a canal on the intercoastal and the water rises into the house there, normally that's settled for flood insurance. So what's the problem with that? The problem with it is this. Flood is normally not included on a home insurance policy. Some carriers will allow you to endorse a flood coverage onto your home insurance policy, but you know, as an experienced agent, I've seen carriers come in and out of that market, allowing people to endorse the policy on or endorse the coverage onto their home. And then all of a sudden, nah, we don't want to do that. If you are inland, there's a very good chance that your agent may have an option for you. But the more sensible thing to me is to purchase a standalone flood insurance program, a flood insurance policy. It is, I don't want to know what the numbers are after we see how many people did not have flood insurance in North Carolina right now. I remember seeing statistics years ago when this happened in Tennessee, and it was somewhat like 30% of the claims were in X-flood zone and they didn't have flood insurance. It was a staggering number. So flood insurance, the premiums did change. You are going to pay more money if is a riskier situation. So the best way to do that, the best way to figure it out is call your agent, get a quote, jump online, get a quote for flood insurance and know what flood zone you're in. X flood zones are normally the least expensive flood zones to be in. So that's what you would want to look for.
So you brought up that you've seen carriers come in and they do different things. Speaking of that, what is the market in Florida like right now? Obviously, we have a lot of folks that have seen rising insurance costs. Is there any help coming down the road that you see either by legislation or through new carriers? What's the current state of the market?
Well, a little bit of both, Sean. You know, some legislation got pushed through this year that we've been waiting for, and last year was a little help. But most of the legislative druthers that we had have been funded, or we'd have attention paid to them right now. They have made some changes with the law to stop AOBs, which are assignment of benefits, which was crazy to just go ahead and assign your insurance policy benefits over to someone that you don't know because they're making a promise that they're going to get money. Or many times you don't even know you signed the form and they're representing you on their own behalf, which is great. I'm glad that it went through because it does help with the fraud issue. So there is some legislative moves that were made in the past year or two. But also I'm seeing carriers starting to stabilize a little bit. At first we thought these were knee-jerk reactions about 4 years ago, but come to find out there was no knee jerk there. It had to happen for some carriers, and simply if they kept on taking on more policies, they would pay more claims and they'd go out of business. So some underwriting, once they felt the pinch, they shut down a lot of areas that they were writing in. They may have shut down the types of homes that they were interested in buying, in insuring, and only went to say, we only want to insure homes for the past 10 that are built in the past 10 years. That doesn't help a lot of us out. But the landscape is getting better. It's not there yet, but I am seeing rate stabilization on renewals right now. I'm seeing more carriers getting back into the market and expanding their offerings and opening back up per se. But I've also seen a couple of carriers come into the state of Florida that have not been in here. So we do see some new carriers coming into the state. And with that, I do caution. I don't want to be back into the same scenario that we're in now, just with different carriers. Just to relive the past couple of years again with new carriers isn't an option. So when we are taking on these new carriers, we're vetting, and the state of Florida is vetting them. And there are some financial requirements, thankfully, that are there. But I still don't know if it is fixed or if it will ever be fixed. It's just manageable right now.
Let's talk about auto insurance for a moment. Now, similar to homeowners insurance, you can't buy a separate flood policy for auto insurance. So is that going to be when their car gets flooded out? How does that get paid? How does that claim?
It possibly doesn't get paid. It all depends on the type of policy and car insurance policy that you have. There are coverages on the car insurance policy, just like the home insurance policy, that you can either opt in or out of. You can select different deductible limits. And normally the flooding, again, with North Carolina, I'm not 100%, but flooding is normally covered in the comprehensive part of the policy. So if you have a comprehensive deductible, usually you'll be on the hook for that deductible, and the carrier would pay the rest of damages. It happens in every state, unfortunately, flooding. So but for that car, all those flooded cars that you're seeing, hopefully there's coverage for comprehensive on those cars, and then they shouldn't have an issue with claims.
So what you're saying is that if they only had a policy that just had liability on it, they're SOL.
Yep, absolutely. It's unfortunate, but that is the case, at least in Florida. Yes.
Now, with regards to the flooded cars, so we see the video with cars that are just parked there, right? The storm surge came in, they're in a parking garage, they get flooded out. But then we see the video where people are driving through the waters that are, would that be a reason to deny the claim, even under that comprehensive coverage?
I know you can't insure against stupidity, but you can try. So in my opinion, it's the same thing as, hey, if you're going to have 5 beers and get behind the wheel, the carrier's still going to pay the claim, if you got into a wreck. So it's that's the same thought about it. If you're that silly to see moving water and not go through it and go through it, you may have your policy canceled the next term, but, or non-renewed. But yeah, they should pay it if you have comprehensive and collision, especially in a catastrophic event like that. They do take that into consideration, I believe.
So lastly, Paul, is there anything that you want those that could be insured or homeowners or even vehicle insurance folks to know that we didn't discuss here today, that we didn't cover? Do you have any PSAs, public service announcements?
The PSAs, all right. So for the PSAs, couple of things on the home insurance policy. Read it. That's the easiest thing that you can do, is read the policy. If you want to cheat, and I would almost advise starting here to begin with, if you continue on to the policy and read the rest of it or not, but it's called the checklist of coverages. It's on every home insurance policy that you receive, at least in Florida. And it goes through a checklist, exactly what it states, of all the coverages on the policy, with a Y for yes if it's covered and an N for no if it's not covered. So you'll see many instances, it'll say flood and for no. So read the home insurance policy. On the policy, buy liability at $300,000. Ask about water backup options, personal injury options, and definitely personal property protection as an endorsement. That's settling your personal property at replacement value. All right. On the car insurance, with the raising rates right now, one of the ways that we've helped clients lower their rates is by taking on more risk yourself. What do I mean by that? Increase your deductibles a little bit, save some money, take some risk for yourself. Yeah, you may have to come out of pocket more, but you're going to save some money. And then while you're looking at your policies, this was not mentioned, but it's something that should be mentioned, is make sure that there's some limit of uninsured motorist on your policy, mostly because it's safe to say a lot of people don't have the insurance that you would expect them to have. The uninsured motorist will help pay for that, pay for your injuries if an uninsured driver hurts you. So it's very important. But those are my main PSAs, Sean, from the insurance business. I'm sure I'll have some new ones for you next time.
Well, Paul, how can our viewers and those that are listening to us, how can they reach out to you and how can they contact you?
The easiest way is online. You can go to insurancewagon.com. Our phone number's there. You can also fill out a request for a quote, request for an appointment, and one of us will get a call out to you.
Well, thanks again, Paul, for walking us through all these insurance coverages and what can happen if you don't or if you do. Now is a good time to review your policy to make sure you're going to be covered for the next storm. If you have any questions about your policy, don't hesitate to reach out to your insurance agent. Until next time, stay safe. We'll be back with more valuable insights on Law Unpacked.